Are you a new investor and you're looking to see what brokerage firm may be the best fit for you if you want to start investing on your own? Well, you're in luck because today we're going to discuss the top three: Fidelity, Charles Schwab, and Vanguard. And you're in luck because between the both of us, we've had accounts at these firms for probably over 20 years. So, welcome to Wealth Twins Show, episode number 5. And let's get into it and hopefully we can help you make a decision. So, Nicole, what do you think is something that they should know before they look into what brokerage firm they want to pick?
I mean, first off, I want to say I don't like you dating us talking about we had these accounts for almost 20 years. Maybe you have. I'm not because I'm only about 22 years old. So, anyway,
Okay.
let's just get that out the way. But in terms of the first thing, anyone that, especially if you're new to investing, I think the first thing that should be on your mind is investment minimum. So, what do I mean by that? How much do you need to actually start using these brokerage firms, using their platforms? Can you get started investing? And one of the biggest issues that we found when it comes to investing is the amount of money someone needs to have to actually start investing, right? So I think that's probably the first thing you want to do because that can knock one or two off your list. Or even if you're not just looking at these top three, Schwab, Fidelity, and Vanguard, it will help you knock off a lot of the other brokerage firms out there. All right. So when it comes to Fidelity and Schwab, there's actually no account minimum that you need to actually open up an account there and actually start investing in, say, their index funds, their stocks, or the ETFs. Now, when it comes to Vanguard, yes, there's no minimum, but in order to get into any of their index funds, which Vanguard is traditionally known for, there are minimums with that. So, in terms of investing in the index funds, you're talking about anywhere between 1 to 3,000, and more commonly, it's going to be at least 3,000 to start getting into the index funds on Vanguard. Do you agree, Nadia?
Yeah, I agree. So I think like if you're a beginner investor and you're more concerned about what platform you can start using right away and not have to worry about any barriers that are going to stop you, I think Vanguard, most of their funds, it's at least $3,000. So that's going to be a barrier for most people. So if you're looking at between the three, Fidelity and Charles Schwab, you can start investing with as little as $1. Now there's certain securities on Vanguard you can start investing in for as little as $1, and we'll get into that later. But if you're looking at which one you could start right away, I think Vanguard kind of loses out because most of the investments that people go there for have a minimum required investment of $3,000.
Now, I want to make it clear when we're saying that the investment amount can be a barrier, I don't want to just focus on if it's a barrier because you don't have the money to invest. I think a lot of times when you're a beginning investor, you have the money, you might be a great saver, but you're afraid to invest in it because you might be thinking you can lose your money. So I believe there's a large class of people out there that have the money to invest, but they don't want to risk it in these brokerage firms or in investing. So with that, that investment minimum can give you a little bit of peace of mind. If you're willing to go and you have the money, you can go to Vanguard with those low cost index funds. It's still a great option. But if you don't want to spend that minimum and you want to get into investing with a small amount because you're afraid to invest and you're afraid because you think you might lose your money, then Charles Schwab and Fidelity become very good options for you. So it's not just as a barrier, but if it's a mental barrier that you're saying I'm not sure I want to risk this much money, then Charles Schwab and Fidelity do offer more on that end for you.
Now, and if you're also looking at it, there is a Vanguard fund that you want to invest in, but you don't want to hit the minimum required investment, all you have to do is go look for the associated ETF. They have the same underlying securities that they are investing in, but there's no minimum investment. The minimum investment is going to be the price of that ETF. Okay, price of share for that ETF.
With that, Nadia is we're both using terms index funds and also ETFs. If these terms are not familiar to you, we're going to link in the description. I want to say our 25 must know investment terms, okay?
Yeah.
So that you can get a little idea of what we're talking about. Because we want to make sure, I think the biggest barrier when it comes to investing is actually the terminology because it's like learning a new language.
I
So,
agree.
because of that, if anything that we say here becomes unclear to you because you don't know the definition, I want to put that resource right in the description for you. You just click on it. It's going to give you the 25 must know investing terms. And I believe that can help you. All right.
So, Nicole, let's jump into another consideration they should have when they're picking between these three investment firms. Now, one of the things I wanted to bring up was the investment selection that they have. So if you're looking at it between Vanguard, Fidelity, and Charles Schwab, you're going to have a wide range of selection. But then it starts to differ about how many you have. Like sometimes too much could be too much. But you also, when it comes to investing on your own, me personally, I would like to have more options of me being able to invest in something. So if you look at Vanguard and Charles Schwab, when it comes to mutual funds or no transaction fee investments, with Vanguard and Fidelity, they have about 3,000 no transaction fee funds that you can invest in. But then when you look at Charles Schwab, that number jumps up to 8,000 that you have the ability to invest in. So if you're a person who wants more options of what they can invest their money in, and you want to see if there are investments that fit your needs, then if you're looking at that, Charles Schwab may be a platform that you want to look into, especially because the number of things you can invest in with no transaction fees is much greater than Fidelity and Vanguard.
Availability of options, yes, I totally agree. You want options, but I think once you get into the thousands range, they're pretty much similar. Okay. You're going to have a good amount of options on any one of these platforms. And especially if you're a beginning investor,
Yeah.
I think the more options you have, the more confusing to be. It's like more like the Chinese food menu. You have over 180 items that you could choose from on a Chinese food menu, but there's only going to be like 4 or 5 that you actually need. So each
Okay,
one of those
first,
are going to
first
give
you're
you.
dating yourself, and you're also telling from where you're from because that's the Chinese food takeout restaurants. You go to a regular Chinese food place, they're not going to have 180 items on the
Well,
menu most of the time.
but those 180 items, half of them they're not gonna cook for you because they probably don't even know what. No one ever orders those things. So that's the same thing when it comes to these platforms, right? As long as you have a good number of core things, and they basically all have, it
They
might
do.
be named different, but they basically are the same thing. It might be a little similar change between each one of them in terms of funds, what you can buy, including ETFs. But as long as you have an option, say for a total market fund, which is investing in all the available public companies available in the stock market. Each one of them has that. So as long as you have options like that, it doesn't really matter to me which one you can go with. But if they don't have options that one has in terms of core investment options, then yes, you should be choosing the one that is more comfortable for you. With that, I want to talk about fees because you also brought that up in terms of the second thing, right?
Yep.
Nadia and I, like she said, we're customers of each one of these brokerage companies. And one of the reasons why we chose them, one, because of reputation, two, because of the availability of the investment options, but three, because they all have an emphasis on a retail investor in terms of fees. Now, fees, no matter what you put yourself in a fund or ETF, fees work against you in terms of growing your money in the market. And the main reason why people put their money in the stock market is for it to grow. So you want to be in a brokerage firm that does not charge you as much as they could when it comes to fees. And each one of these does a good job with that.
Well, I would say yes, but there is a fee that Vanguard does charge. So when it comes to Fidelity and Charles Schwab, having an account there, you don't have an annual fee. When you have an account at Vanguard, there is a $25 annual fee. So just for opening an account there. So if you're looking between the two and fees are very important to you, I don't want to pay a fee just because I open an account there and I want to pay that annually. I don't even like having credit cards that charge me an annual fee. So if I was looking at fees, first thing I'm going to look at is, does this company charge me a fee for just opening an account here? You're going to have fees depending on what investment you have. Like if you're buying a mutual fund, you're going to look at expense ratio. And like Nicole said, you can find those terms in the link that we're going to put at this in the description of this video. But I already know at some point I'm going to pay fees, but I don't want to just pay a regular flat base fee just for having an account there. Vanguard charges that, Charles Schwab and Fidelity do not. And if we're on the topic of expense ratio, Fidelity is the only one that I can see that has zero expense ratio funds, and that's very rare. So if you're looking at that, Fidelity might win out there. Would you agree, Nicole?
I agree. So when you're talking about expense ratio, let's just make that definition pretty clear. An expense ratio is really covering the expenses of running the fund.
Yep.
Okay. So the lower it costs to cover the operating cost, the marketing cost to have that fund, the better. All right. So all these have about like 0.02% expense ratio when you're dealing with mutual funds which turns into, like, say, for instance, SWPPX. This is Charles Schwab's S&P 500 index fund. It has an expense ratio of 0.02%. So if you want to turn that into dollar amounts, that is, they're charging you $2 for every $1,000 invested. All right. So these are very, very low expense ratios when it comes to these index funds. And the reason why Nadi and I are bringing up index funds is because we believe, especially with beginning investors, index funds are probably more in the realm, and ETFs is probably where you want to stay and before you start dealing with individual stocks. But we'll talk about how you can get into individual stocks if you like it. Now, one of the fees that may concern people, and especially beginners if they don't know what they're doing, is commission fees, right? People that want to actively trade, going in and out of individual stocks or just trading options and things like that, you're going to get hit with fees. And I think if you're that type of person who thinks the way to get into investing outside your retirement account is to actively trade, you might want to steer yourself more towards Fidelity rather than the other two platforms. All right. So that's just my 2 cents on that.
Well, I will say that Charles Schwab also, when you're looking at the target market for each one of these brokerage firms, I think Fidelity and Charles Schwab typically go after the same client. So they're looking for people who trade a lot, but they're also looking for people who are investing for the long term. So I think they're pretty even on that aspect, right?
Right.
But if you're trying to, depending on what you're trading for, or you want more research tools, just even if you want to be a long term investor or you want to actively trade, I think they all have very good research tools. They all allow you to join in trainings that they give on a regular basis. Like I get emails from each one of them on a regular basis about a training I can join to find out more about a particular subject. Or you can also have the option of speaking to a live person, depending on, I guess, the amount that you have. They'll give you someone that will be like your personal person that will reach out to you and speak to you and answer any questions you have, rather than you having to go directly to customer service and ask a question there.
Yeah, when it comes to Vanguard, though, I would say their target market or their target customer is more like people who are investing for retirement or
Yeah,
long-term buy and hold. I would not go to Vanguard and start actively trading.
I wouldn't
Okay.
either.
Yeah. So it's just that's not what you use it for, and that's not what they're known for. That wasn't their reputation. Their reputation was high quality funds that you can get into that are low expense. All right. So that's just something to keep in mind. That's also the reason why they have such high minimums, I would say, as well. Now, I want to bring up something that Fidelity and Schwab have that are kind of new in terms of being offered as an actual option, which is fractional shares.
Okay.
So, can you go into more of what fractional shares are and how that's good for beginners or anybody who wants to start really testing out the stock market outside of the retirement accounts?
So if you're looking at fractional shares, it depends on what platform. They call it fractional shares or they call it stock slice at Charles Schwab, but it's the same thing. Say a share of a stock that you want to buy, it's $100, but you don't have $100 in your account, or you don't want to invest a full $100 because you're just dipping your foot into the water. What you can do is buy a portion of that stock or a fraction of that stock. So say if it's $100, say you want to buy $5 worth of that stock. You can. You can do this at Charles Schwab and Vanguard and Fidelity. The only stipulation at Vanguard is that you're only able to buy fractional shares of a Vanguard ETF. This is not the same when you're looking at Charles Schwab or Fidelity. You are able to buy fractional shares in a wide range of companies. And I believe you can both also buy them in ETFs also. Nicole, let me know if I'm wrong, but I think that is the case.
I won't call you wrong, but I can call you that you can you can get a little bit more into the weeds on this one. So when it comes to
Okay, go ahead.
Charles Schwab, they have stock slices. They only allow you to buy S&P 500 stocks. They do not allow you to buy ETFs on their platform, and they do it for
No, they don't
$5.
allow you to buy fractional shares of ETFs on the platform. You can buy
Yes.
ETFs.
No, you can buy ETFs, but when we're talking about fractional shares,
Yes.
Charles Schwab allows you to do fractional shares of only S&P 500 companies, and it's only their stock. Okay, so they don't allow you to do fractional shares of ETFs outright. Now, and on top of that, when it comes to Charles Schwab, they allow you to do it, but you have to do it in $5 increments. All
Yeah.
right, so it narrows it down, and also the cost is about $5. When it comes to Fidelity, you can do fractional shares of companies, individual stock. You can also do fractional shares of ETFs. And their minimum investment for those fractional shares is $1. Now, in terms of money amounts, it's really not that big of a difference. But in terms of options, you have a bigger option pool of options when it comes to Fidelity. Maybe we shouldn't use the word options because you're going to confuse it with investments. So we're not talking about investing in options. We're talking about the opportunity for you to invest in the pool of investments that you have. You're going to have a greater pool of investments to choose from in Fidelity, right? But none of these are going to move the needle. This is mainly used for you to get into an investment that you like at a low cost, just maybe for you to test it out or to buy over time. But it's not going to be something that you're going to gain millions on because you're investing $5 at a time. Okay. But it's a very good way for beginners to test the market. And for that reason, I like Charles Schwab and I also like Fidelity for that purpose. Now, when it comes to research and trading tools, this is something a lot of people look at when you're deciding between what brokerage company you're going to use, because you want to have a brokerage company where the platform is good enough for you to do some research and also just have the knowledge base behind it, maybe some education that you can access. So with that, what was that?
Can I take this one because I have a very strong opinion when it comes to the user interface, and I'm gonna say this why. So I've experienced Fidelity because my husband has a Fidelity account. My Nicole has Fidelity. I never liked their platform. I thought it's too much going on. I don't want to use it. So I always went towards Charles Schwab, and then I opened up Vanguard. Right now, when it comes to Vanguard, I'm going to be completely honest. Their platform was trash when it came to being a beginner investor or just an investor in general, and you're wanting to find stuff on their site to help you invest and help you just even trade or just do the trade in the beginning, right? They have improved it recently, and I just played around with it recently. But when it comes to the usability of their websites, the more user friendly it is, the more likely I'm going to use that platform to start investing and start trading it. And I lean more towards Charles Schwab because it just makes it easier. It's much easier to find their research tools. It's much easier to buy their fractional shares, to trade whatever type of security I want. And it's much easier to find out what my accounts are, how much I have in it, and move money around. I just like the usability of Charles Schwab over the other platforms. And I know Nicole may have her opinion too, but I can speak from a user perspective of both Vanguard and Charles Schwab. Charles Schwab, hands down, it's much easier to use. And when it's much easier to use, I'm more likely going to have more investments on that platform and invest more often on that platform. And what I like also is this the way that Charles Schwab just consolidates everything into one view. I can break it out into a more detailed view. I can see it and consolidate it. I cannot find that ability, or I don't even want to spend the time doing that on Vanguard. So that's just my opinion. Nicole, you may have a different one.
Okay, so I agree with Nadia. So I deal with Charles Schwab and also Fidelity. And I can tell you, if you're a beginning investor, if you stick to certain portions of the Fidelity website, you're going to be okay. But I believe that's another barrier. Like Nadia was saying, if it's confusing to you, you might not want to be on there and go on there often, right? So I agree. Fidelity can be pretty messy, even though it's robust. So with that, Charles Schwab, when she says it's easy to use, some people might call that boring.
Yeah,
Nadia and I both believe in being boring. All
I'm a
right.
boring investor.
It doesn't need to be that exciting. It just needs to make money.
Exactly.
Let's stick with that.
That's the
So
only thing I care about is not lose. Well, two things: not losing money and making money. That's the
let's
only
just
things I care about.
yeah. So with that, of course, you're gonna have all the things you need on Charles Schwab and also Fidelity. But in terms of ease of use, I have used both platforms. I think Charles Schwab does come out ahead of it because when it comes to just checking what's in your account, how much is like how much did it go up, how much did it go down? They got so many buttons and it's just like, oh my gosh, like can we just bring it back down? Yes, you can figure out how to use it, but do you want to spend that much time learning how to use the platform, especially if you're not using it on a day-to-day basis? If you're a long-term beginning investor or just long-term investor, you don't want to have to keep logging in and checking out and really having to learn a platform. That's more for like active trading, I think. So because of that, I think the easier the platform, the better. And I would give this to Charles Schwab. And I know Nadia keeps saying that Vanguard's thing is trash. I don't know. I don't have that
To
kind of.
be fair, I recently logged in. It is better than it was in recent years. They have improved it. Maybe they got a lot of feedback from customers like me, and people were just not going to the site. So they have improved it. But when you click on certain things, it brings you to the old user interface, and then I was like, oh, you
So
lost me
maybe they're
again.
in the transition
During
period,
the
you know?
transition, I have received certain surveys from them to ask, hey, can we get your feedback? What do you think about this now? So they are using the feedback they're getting and they're improving their site and their usability. So I will give them points for that.
Okay, and I mean, each one of these again, it's a bit of a learning curve on any one of these platforms, right? So
Yeah.
we're not going to say that. It's a bit of a learning curve. Some have a smaller learning curve than others. But if you really like, maybe you're an older investor, maybe you're towards your 40s, 50s, you might want to steer away from the more complicated platforms and stick to something that's going to be a little bit boring, but still offer you everything that you need.
But if
Okay?
you're intent on buying certain funds that are only sold at Vanguard and don't have a fee, then it's worth going through the little bit of difficulty in order to start buying those funds. Now, I will say a little hack here when it comes to usability of the interface. You can call up the customer service and have them walk through exactly what you want to do so you know exactly where you should be going so you don't have to futz around on the site. If you get a customer service rep who doesn't know, just ask for another one, but they should be able to walk you through, show you where the research tools are, show you how to buy and sell whatever you're looking to do for investing purposes, and see how you can consolidate the view or see a more detailed view of your account.
Now, I want to piggyback on that because I know that one of the biggest funds out there that people love in Vanguard is VTSAX, right? This is one of the index funds. Now, I didn't want to open up a Vanguard account in order to access that fund. So, what's good about the Fidelity and also Charles Schwab, you can actually buy competitors index funds on their platform, but they do charge you a fee for it. So it's not like when it comes to VTS SAX, it was actually a $75 transaction fee or fee that they're going to attach to it. And it's also a minimum that they want you to buy. Same thing with buying a Charles Schwab index fund on Fidelity. You're going to get hit with a fee. It's actually a little lower, but you're going to get hit with those fees. But it's easier if you just want to say, I'm going to stay with one broker and then buy funds from another broker. It is easier, but it comes with a fee attached. So if you're going to do that type of fee, you should make the amount that you're buying big enough so that the fee is not an issue because it's actually a flat rate fee. So if you're just trying to buy like just $3,000 worth of BTSAX, I wouldn't buy it in Fidelity because you're going to get hit with a $75 fee. But so as the numbers get bigger of what you buy, the fee is less. It matters less. So that's what I want to say. But and also with Fidelity, when it comes to competitors ETFs, right? Like say Charles Schwab SCHD. I know I'm dropping all these tickers. Do not take these tickers as a sign of recommendation. Okay. I just want to put that out there. These videos are for informational purpose only. But SCHD is an ETF and you can buy it on Fidelity's platform without having a fee. So that's just something to keep in mind. And as Nadia was mentioning, it's a good segue to the next thing that we want to talk about when it comes to these platforms is customer service. Every one of the platforms, Charles Schwab, Fidelity, Vanguard, all these brokerage firms can give you live customer service. And that's one of the benefits and why I think this is a great thing for beginning investors or people who are just scared to start investing when it comes to outside of retirement accounts. Do you agree with that, Nadia?
I agree. Like if I'm going into a new venture and I don't know what I'm doing, I much rather
Which
have
is
a
a lot
live
of
person.
times, right?
Whatever. I much rather have a person I can speak to live and get my questions answered. The last thing I want to do is have to go through email and not be able to contact them when I have that like burning question, especially when I'm trying to make a trade and say, you know what, this is what I want to buy today. And then I have to wait 48 hours in order for someone to get back to me. And then by that time, the market moved on me. Okay. So I think having live customer service is a big pro for each one of these brokerages, especially if you're a beginner investor.
I think it's more also if you're an older investor as well. Now, when I mean older, I'm talking about Gen X and above.
Yeah.
Okay. For Gen Z and millennials, they probably prefer because they grew up texting and stuff. They
Yeah, they
actually
probably
probably
don't want to
prefer.
talk to anybody on the phone.
They don't like to talk. Okay. So if you still remember how to use the telephone as a phone, then you might want live customer service. But if you're used to texting and using that apps and all the time, then maybe that's why you might want a Robinhood or Acorn or like a Moo, things like that, because those are more geared towards a younger generation who are more comfortable just having their questions answered on an email or through text message. Where 99 a little bit older and we want to actually talk to a person and get questions answered, and we might have more money to invest on top of that. So the more money you have to invest, the more likely you might want to speak to a live person so that you don't mess things up. So I think that's a good thing, and I think all three of them do a good job with customer service.
Yeah,
Okay,
now in Vanguard, you might get tiered, so it depends on how quickly they pick up your
can
phone
you
calls.
explain what tiered is, Nadia?
Tiered means how much you have invested at that firm. So if you're under, I forgot what the minimums are. You're in different tiers, so you're going to get a different level of customer service. I noticed that is in Vanguard. I'm not so sure about Fidelity and Charles Schwab. I haven't seen that on their sites, but I haven't experienced it. But Vanguard, there is tiered customer service.
So you get
Now,
to wait 5 minutes if you have less than 100,000. They call you back immediately if you had a
they're like
million.
you're number 20 on hold. We'll call you back when your place in line comes, or you get somebody who picks up right away. I'm just
Oh,
saying, but it's on their website. You'll find out that they have tiered customer service. Charles Schwab has tiered probably too, but it's more about a higher touch point with a customer versus how the customer service is laid out, I think, in my opinion. Okay.
yeah, it's funny, like, the more money you have invested, the more they like to get to know you a little more. So that's just part of the business, right? You might
Yeah, you
not
might
get
get some
any kind of
personal
communication.
emails.
Yeah, you
Mm.
might just get your quarterly statements or so, or, "Hey, investor news," until you start getting enough money under the investments. Then you start getting actual calls or, "Hey, we're having this webinar. It's about estate planning." So those things come with the territory
Or,
because on
hey,
top
this is my name. I just wanted to reach out to you and speak to you, see if you have any questions. Those are the different touch points that I'm,
that's a good thing when they start reaching out to you because that means your investments are doing well.
yes.
Okay. And you mean it also means that they want to keep you as a customer. So I don't think that's a problem, but I don't think I like the tiered customer service in terms of you got to wait longer depending on the amount of money you have. But I guess on the other flipping, if I have a lot more money invested than someone else, I want a higher touch point and more customer service or less wait time. So I guess they have a limited resource when it comes to customer service and live resources. So you do have to tier
Yeah,
it for that reason,
I
right?
agree. So, well, let's jump onto another topic. Now, a lot of people are very interested in Charles Schwab's debit card. I'm a big fan of it. But did you also know that Fidelity has a debit card that you can use?
Yep.
Has no ATM fees. You can use it all over. And well, when I say no ATM fees, your ATM fees are reimbursed. When you look at Vanguard, there is no savings or checking account there. They have something called a cash sweep account. It's a basically if you have money that's not invested overnight, they will move it into an account that pays about, let me look at my notes, 4.7%, right? The other ones have the cash sweep too. I think Charles Schwab, in order to get your money swept over into like technically like a high yield APY or whatever, they you have to be part of the intelligent investor portfolio, right? It's called the Smart Sweep program. What I can read, the cash that you have uninvested overnight at Charles Schwab, it's going to be at a low APY of 0.48%. Does that matter? No. Are you a person who wants a debit card that has ATM fee reimbursements, you could travel with it and not have to pay those fees, then you might want to look at Charles Schwab and Fidelity. Those are known for having their ATM cards. You can link to a checking account. I know Charles Schwab has a checking and savings account that you can open up. And it just makes it easier for you to invest your money because the money is just sitting right there in those accounts so you can move it directly into your brokerage account rather than waiting 3 business days for it to come from another institution. Now, I will let you know when I was traveling abroad, when I tried to move money from my Charles Schwab checking account into my brokerage account or vice versa, it took probably like if I did it on a Friday and not thinking anything about it, it took over the weekend and another business day, which I wasn't expecting because that was like it's in the same institution. So that's just something to keep in mind when you're moving money back and forth. Just to understand, it's not always automatic or instantaneous when you're using the same institution to move funds back and forth. So sometimes you may have to wait. What do you think, Nicole?
I mean, I would say what you're basically saying Charles Schwab and also Fidelity are kind of trying to be your one-stop solution, right? And they're trying to
Exactly.
capture as much of the market as they can. So not only are they giving you some zero cost funds or low cost funds, offering a huge range of research and trading tools, a lot of customer service, but they're also now offering these type of cash management accounts, which is like a hybrid of a savings and checking account. I think it's a good thing because now they're kind of giving banks a little run for their money, right? When it comes to the amount that you're getting on these accounts, I really wouldn't be so much of a stickler on it because these rates will move depending on what the interest rate environment is. And when it comes to a sweep account, you really don't want that much cash in your account. But if you're trying to wait out and try to see if it's a good time to invest, some people might say right now is not the best time at the market as at a high. We don't believe in time in the market. That's just a side note. But if you're going to have your money put in cash or somewhere, then it's good to have a higher yield on that money. All right. But in overall, yeah, if you want a debit card, especially when they're reimbursing fees, because it can be pretty annoying having, if you're out of state or so and you can't get to a location that your bank is in to get hit with those fees on both the ATM you're using, also on the back end from your bank, then these provide another option. And I think it's a good option to have. But I think, Nadia, why don't we give an overall pros and cons to end this thing out? What do you think? So, what's the
Well,
biggest pro in terms of Charles Schwab, biggest pro in terms of Vanguard, and the biggest con of those? And then I'll do the same thing with my experience with Fidelity and also Charles Schwab. Okay, so
okay.
Charles Schwab, what's the biggest pro?
Biggest pro is how easy it is to use their app and their website. All right. And every time I go in there, I'm like, oh, this is even easier. Like if I started investing in themes. Now, if you don't know what themes are, it's just a group of companies that are grouped together based on their relation to each other or theme. So an example would be what companies are big in cryptocurrency right now, or what companies are big into AI. There's a theme for that. Or what companies are big into medical care for the aging population. There's a theme. They give you. It's almost like an ETF that you can
Even
start
like a
investing.
social impact theme you can do, right?
Yeah,
What
there's it's
companies are
multiple
being
themes.
environmentally friendly?
Yeah, so when it comes to that, Fidelity and Charles Schwab have it. I haven't looked at Vanguard. I doubt they have this, but and you can put in the comments if you know that they do have this because that would be interesting for me to find out. But when I went to do it on Charles Schwab, I can break out how much I had in a theme, and then I can break out the percentage I had in each company based on my investment within that theme. So it's so easy to use. Like any new feature I see, I can play around in it, and I can pretty much pick it up pretty quickly, right? When
Okay,
it
so the
comes to
pro for Charles Schwab is easy
how
to
easy it
use.
is to use,
Okay,
right?
so Vanguard. What is the pro
Vanguard,
of Vanguard?
Pro Vanguard, I they have great low cost index funds that I can just set up an um,
Set it and forget it.
automatic withdrawal from my bank account into Vanguard, and it will purchase the shares for me. They have good low cost funds that are good options for me to do dollar cost averaging. Are we going into pros and cons here, or just the
Now,
pros?
con of Charles Schwab.
Con and Charles Schwab, I will say that their customer service has fallen off recently. I think sometimes, or maybe I'm just getting better because I feel like I know more about what I'm trying to invest in or more about the platform than the customer service rep that I got on the phone. Now, maybe that was just my experience recently with the people I've been speaking to, but I'm just going to be honest there. Um,
Okay, and con for Vanguard.
Con for Vanguard, it, I get random fees here. I'm like, why is this negative here? What is it? I don't understand. And like just speaking to customer service, they don't make it easier for you to understand what's going on. They just speak to you like they're reading the manual. And it's like you can't go into more detail to explain this in layman's term for me so I can understand exactly. That's my con. So I don't really play around in Vanguard like that. Like I said, I set it up, forget it, let it go in there, and I monitor my portfolio. I'm not really trying to speak in there or play around in the platform. That's the con there.
Okay. For me, the pro for Charles Schwab is really, yes, I agree, ease of use of platform. Also, the high quality of the low cost funds that they have. I do like that.
Yep.
And I haven't really dealt with customer service. And actually, no, I did. And they were pretty helpful in that. But I've experienced the same problem you said with customer service. I experienced that with Fidelity. Because I asked them, hey, do you have themes or investing? I want to know, and that could be something I'm interested in. And the person's like, oh no, we don't have anything like that. And then I Googled and then I saw that they had. So I
Don't you
think
hate
that's
it when
just,
someone's so sure and they're so wrong? Like I asked someone for directions the other day. They were so sure they point me in the right direction. I'm like, that seems a little off. I check it. It was the complete opposite direction. So if you
it
don't know, just
happens.
say you
So
don't know. It's
can we
okay.
fault them? Like, it just happens, just humans gonna human,
Just say you
okay?
don't
And we're
know.
all gonna make mistakes, all right? So, sometimes people don't say, "I don't know," you know? But and it's okay to say, "I don't know." If you guys ask me a question, I don't know, if I don't say, "I don't know," I'm gonna be upset with myself. So, you keep me
Exactly.
honest to that, all right? So, it's totally fine to say, "I don't know, but I can look into it for you." That's the way you should answer it,
Exactly.
right? So, a pro with, Fidelity, I like the zero cost funds. There's some you have to, if you chose to move your money over from Fidelity, you would have to sell those investments. But having zero funds like FZROX, which is one of the zero funds, zero minimum,
Expense rate.
zero fees, zero commissions, like it's just these
Did
are
it
things
have a
that,
zero expense ratio too? I think.
yeah, it's like it's just zero. Okay,
Yeah.
call it zero. So with that, that's a very nice option to have. Customer service is live. It doesn't really bother me. So the con with it, I would say, is the platform is pretty messy. I don't like going there that often. If I do, I know I'm going to spend some time, and they do offer new features, but it's like you got to sit down and really try to learn these features. Or you can do like Nadia said, get on customer service and have them walk you through it. Or
Yeah.
you can always go to YouTube too and see who has a video about these platforms. But other than that, I could do a toss up between Charles Schwab and Fidelity,
Yeah.
really, you know? So I think, but when it came to Vanguard, your experience with Vanguard is really what kind of turned me off to dealing with Vanguard. But Vanguard is a huge favorite for people who are into financial independence, and also just low cost index funds. So if you're into that, I'm not saying we're not saying anything about their investments. It's about
Yes.
the platform. Okay.
And
So if
like I
you're a
said,
person,
even though the platform is not the best for me, I still invest in Vanguard funds through Vanguard. It hasn't stopped me. It's not that big of a barrier that I say it's not worth it. It is
yeah.
worth it. Look into it to see if it's worth it for you.
So I think with these three, overall, you really can't go wrong,
Yeah,
right? We are customers of all three. We're not going anywhere. We have not seen another site that's going to make us close our accounts and get off of these platforms.
I agree.
Okay. So
And you
with
said
that,
something key there, Nicole. We are customers. We don't work for them. Okay? Please don't let me see in the comments that you're getting locked out of your account. I will
yeah. So
help you to a certain point. I can't do much.
we totally empathize with anyone that gets locked out of accounts. These are past comments that we have received, okay? And also, we totally empathize and we hate it too. But the best way to help you is to really call customer service. It's easy to find, and they will walk you through it. We wish we could help you, but we're limited in that type of respect, okay?
Exactly.
All we can do is tell you about experience and what we believe on these platforms, all right? And also the investment options that you have for them. All right. So with that, I think Nadia, I think with that, we hope that you like this. If you do like the podcast, please let us know down in the comments, and
Yeah.
also like, subscribe. And if you like this type of content in general and you want to get to know the twins some more, we offer a free weekly newsletter. We only send it out once a week, right? And we try to make it both educational, inspirational, and also just
Entertaining.
entertaining, right? And we both take the time, it's Nadia or me, writing these emails to you, and we're trying to go deeper into these subjects that we believe,
Exactly.
not just like what the algorithm wants us to talk about, but what we want to talk about and what we believe is important for you. So if you want that type of insight that's coming from Nadia or me on a weekly basis, like we said, one email a week, please join the Wealth Pack down below. Oh, sorry, you will see the link in the description below. But if not, here it is, wealthpack.wealthtwins.com. And we would
You
love
got
for
it.
you to join the community. We answer all the emails that we get from when people respond to us, and we just love helping people. So with that, we'll see you next time. All right, guys?
See you in the next episode.